Hey guys, it is May the 6th, the first week of May. And boy, this market woke up with a hangover, huh? For Cinco de Mayo. What an exciting times that we're living in. I tell you, this is still the best show on television. Okay, I'm going to share my screen so that we can get started and off to this Friday. I would mention past performance. It's not indicative of future returns. For those of you that are watching this, we do have the annual conference coming up very quickly on May the 15th. And then obviously, I always give a shout out to my friend Rich, who has his morning technicals show. He's also got a bunch of really cool challenges if you are still trying to figure out if you want to be a day trader, if you want to do more swing trading or just long-term investing and keeping up to speed. So check him out as well. You can find all of that at gurula.net. And then we're going to get into it. Oh my gosh, what a crazy screen. Couldn't possibly have woken up more red. And now everything seems to want to try to end the day flat. Here's the indices right here. We got the S&P kissing flat, NASDAQ after being down again, almost 100 basis points, coming back to flat. The Russell actually trying to make it up. In crude oil, well, it's where it actually should be at 110. And it really tells you that if you are doing more of a buy and hold sort of strategy, or just even a little bit longer in horizon, call it through the summer, it really pays to do the work and then know where you're trying to get to and identify when things are coming on sale. And there are so many opportunities that are related to that I'm just going to show you from today. It's been kind of nutty, but I want to go through a little bit about the economic data and how to look about just that macro piece. Some questions that I think are really important to kind of think through as you try to figure out where you want to set up your portfolio. And then what I'm seeing in earnings, and then just a couple of revisitations of those macro themes, particularly in energy and raw material, because it's really easy when the market is this volatile to get nervous about your positions, nervous about what the work that you've done, nervous about all of that. And I fight that as well. So it's always academic exercise that I kind of go through just to make sure that I have my head on straight when the market seems to want to sell everything. Okay, so this week we just had the payrolls come out. They were more or less as expected. It really speaks to the idea that came out of the Fed yesterday, but has been the thematic that the labor, he can't do very much to impact pricing and inflation. He can't change the price of oil. Only the markets can do that. Same thing with food. Mother Nature and the markets are really what's going to do that. But when it comes to the cost of labor, and when it comes to destroying demand, which is what he essentially has to do when you have this massive inflating situation, and when you also have it within the labor markets such that you've got record tightness where people just, are getting, employers can't find the other side of their trade as relates to jobs, then unfortunately, he's got to kind of take the punch bowl away from the party, which is what they always describe it as. Okay, so that is a thing. And it is a really scary thing because you got to kind of fly the plane very narrowly through some pretty heavy storms here. Next week, CPI, which is always a big indicator, that is the number that is used for inflation. To a very lesser extent, you might be able to quote the PCE number for inflation, but usually when people are talking about inflation, it's this CPI number that comes out on Wednesday. We know it's going to be ugly. It's just how ugly. And so in a lot of ways, you still have some pretty significant volatility. On Monday, you get the inflation expectations, which is just going to more or less, if it comes out weird, it's going to make people a little anxious and aggressive into that Wednesday number. So you do want to make sure that you're ahead, and you want to be careful. I'm going to mute you guys just really quick so that I don't have a feedback. You're going to want to make sure that you're just hedged into it. Now, to me, the more important things that are starting to come out are the federal budget and things of that nature. And then you've got PPI later too. This is very important as well, because these are the major questions that I have. And you guys know that for me, a lot of times I watch this market as if it was watching a soap opera or, a series or something. And one of the bigger themes that I think is only just starting to present itself, I don't hear people talking about this yet in any kind of meaningful way, but it is a real thing. And that is that the US economic situation is significantly better. We are in a better place. We had a different set of cards coming into the Ukraine crisis and into COVID, quite frankly. but our circumstances are very different from the rest of the world. And as we mentioned the other day, with the import export data coming in with a trade deficit, that scared a lot of people. But to me, that just reiterates the fact that this is true, that this dynamic exists. Now, if you go back to your history books and revisit 1998, you'll see that during that period of time, even though the world went into turmoil because of the foreign currency issues that were happening therein and the runs on banks that happened overseas, the US still presented a positive GDP growth number, albeit very low. And in many ways, the stability of the US dollar and the strength of the US dollar pulled a lot of the markets out of some pretty dire circumstances. Now, in other cases, we were the cause of those circumstances, so fair and square, but it's something to note in how to think about how we come out of this together, holding hands, et cetera. And I haven't thought through exactly what that implies to different places. It certainly means that the commodities that we sell and that we export should do quite well in such a scenario. It does bode particular things for the currency guys that are going to have a lot to say on this matter. So I'm not going to try to enter their forum of knowledge, but it's just something that I think we are still not talking about extensively, and it's kind of going to get more important as we start to raise rates in an attempt to kind of taper down some of this inflation that we've been experiencing. Okay, additionally, realize that there's kind of this oddity that could ensue in that it is always the case that when we import in cheap labor is what we're doing when we're importing goods from other countries, we do have some benefit to the inflation numbers. That's what's maintained. And I've had people yell at me on this one too. That's what allowed us to have like a more moderated inflation over the last 2 decades was we were essentially importing in goods from countries where labor costs were extremely low. So we're going to have to really watch how all of this plays out for us, but also really watch what it does to overseas stability, because that's going to become, I think, in the middle part of the coming quarter and then the latter part of the year, it's going to be a thing, for lack of a better way to describe it. It'll be a real thing. Okay. There is also a lot of questions on commodity shortages and how that resolves itself. And I'm going to show you some things from a name that we've been very bullish on, Consol Energy, ticker CEIX, because they reported on the 3rd, 2 days ago. They had some really interesting things to say. Like, we gotta talk, in other words. And then I really want to show you the widening gap between winners and losers is significant. Now, one of the things that you guys know, these are my personal ratings. I don't do relative ratings, okay? Like this whole relative to the estimates on the street and FactSet, I find that massively distorting to any attempt to understand what happened in the economy if you're doing bottom up. And the reason I say that is, for example, one that I'm going to pick on, even though I actually don't necessarily, is Clorox, right? Clorox had top line growth of 2%, bottom line growth down 19%. But because it beat street expectations, the thing rallied, okay? Like it's trading at almost 30 times earnings and it pays a 3% dividend yield, which it probably doesn't have any risk for sure, but it does have to pay it. In other words, so cash has to come out and then pay the investor. And she thinks she's going to get pricing, but she also has to do it into a rising interest rate environment where we're going to do demand destruction and pray that people don't trade down from Clorox, which she's been benefiting from, and down into cheaper types of cleaners. So that's what she's got to actually accomplish. And at 30 times earnings, I'm like, wow, good luck to her if she accomplishes it. I have nothing but love, but at the same time, that's what it means to go by street estimates where people beat street estimates. So I'm not a fan, is what I'm saying. When I do my estimates and when I look at what the companies do, I do it independently of what I think the stocks are going to do. And this is the first time that it's actually come this low since COVID began. What I'm saying is that most companies are not experiencing top line growth and bottom line growth or somewhat stable, right? Instead, what I'm seeing among almost 50%, so this is still about 50% are doing pretty decently, but a much higher number than normal is getting maybe they're getting single digit top line growth, but they are not bringing a damn penny of that down into earnings. And so you're ending up with either flat earnings despite working really hard, your salespeople working like crazy to make more money, or alternatively, you actually have negative some kind of negative scenario. For example, Etsy had like top line growth, like double digits, right? Bottom line operating income came in down 20. So yeah, like and it's terrible because it does mean that you have people working a lot harder to make less money. That's what that means. Okay. So that is happening, and you're really seeing winners and losers this quarter. Now, if we've got demand destruction on top of it, and we've got a few other dynamics, we don't have a resolved supply chain, then this will become accentuated in the summer months, which don't have natural demand drivers to begin with, such as, like, you do have some demand drivers in the way of travel. So certainly something like Booking, which crushed it, Expedia, which in fairness, I think actually did fairly well, but the street just wanted to clobber it because in theory it didn't come in with expectations, which I think were nonsensical. Anyway, you will see that, there is a natural demand in the summer for travel, but for everything else, you kind of got to wait till the third quarter. Like back to school happens in the third quarter. You've got a few more holidays in the third quarter, et cetera, et cetera, et cetera. And then you have like a little bit of a reprieve from paying your energy bill because it's not screaming hot in the summer like it is, and you have to allocate your capital there. And then you have less driving in that fall period versus the summer period, which is traditionally where you drive your car. So all of that, we have to get past this summer. And that is part of the reason why you have sell in May and go away. But I did want to mention that to you. Supply chain, I didn't hear any alleviation of supply chain this quarter at all. And still heard every single person talking about inflation coming from energy, but also the entire raw materials complex. That hasn't been resolved yet. Some people, they're definitely getting pricing through, like Amendolas, which is basically makes your Oreo cookies, your biscuits. If you're European watching this, they are absolutely getting pricing through, but they're like really lucky. Not everybody's doing that. And then you have this uniqueness where we in the United States are still experiencing labor shortage. That's why we're raising rates. That's the cited reason, for the record. The rest of the world may not actually be having that, which bodes a particular way for the competitiveness of US goods overseas. You're going to have to go like sector by sector, area by area. But it does mean that for some foreign countries, they may actually benefit from that. Additionally, one of the things that hasn't really been showing up yet at this point is manufacturing weakness overseas. And specifically, I'm talking Europe here because they do have a fair number of exports, not the least of which is autos in that industry, as well as some heavy equipment. Haven't heard a lot that there's a problem there, except the traditional like raw materials portion. We anticipate that the wheels should come off of that at some point fairly soon, especially since they would traditionally have sourced all of their raw materials, their steel, let's call it, from the Ukraine or Belarus, which right now isn't putting out that iron. And then additionally, they're going to have that increase in energy costs. Now, I really, really, really want to show you how one other thing on this. So we're going to exit at this point, almost 400 plus companies from what I've been able to record in the S&P 500 have reported. So we are more or less out of earnings season. We've got a couple of guys that still matter a lot, not the least of which is Disney to report next week. And then a couple of media names and electronic arts will report. And then Oxy, which is a Warren Buffett favorite. So, like that'll be reporting. And then Apache. And then really, it dies down a lot. You do have a lot of consumer discretionary that reports in the back half of the month. So we get like kind of this lull for a week, 2 weeks, and then all of retail reports more or less in that last part of the month. And then we're out for the summer. That's it for earnings season, but we are mostly out of it at this point. Okay. So when I think in those terms, I'm left with more questions coming out of this earnings season than I am with answers or a true strong vision. And I think it's going to remain that way. We may get volatility ebbing and flowing, but whenever you see that, just set your clock to it. If you see vol start to kiss 20, 21, you need to buy the VIX, buy UVX, et cetera. Right now, it's kind of in the middle, but I just want to always like remind you so that you have time in case you miss a show or whatever to keep these things on your radar screen. Volatility should not subside through the summer is the number one thing that I heard on all these calls, because not anyone has a clue about what's going on. And, some companies are operating great. They're just lucky. Now, here's another one, Gartner Group. Gartner Group had a great quarter. What they do is research, conferences, consulting. They're a place you go if you're looking for some smart people to tell you something. And this research increase is pretty significant. It tells you that like companies aren't figuring this out internally and they're willing to pay someone to give them some sense for what the right thing to do is. And then if they can get a consultant to say it was the right thing to do, at least they CYA themselves a little bit. That's what's happening here, you know? And again, I'm not bullish Gartner right now because it is really trading about twice its earnings. That said, if you own it, I'm not necessarily bearish it either. I just feel like, you know, I can't come out on it. So I don't want to be confused on that. So there's, anyways, just realize the confusion factor. I'm using this as a proxy for how confused even companies are, because that's where I would sit if someone asked me, May, what should I do for the back half? Wait and see is kind of where I'm at on a few things. Now, I have one correction I really wanted to do because someone pointed it out in my earlier videos. So I am going to do that. You guys are welcome to catch me when I do these things because I'm just one lady trying to do all this research. But sometimes because I am an American, I'll go ahead and admit it, I get my European stuff all mixed up, my European jargon. Occasionally I have said that Norway and the UK are part of the EU. I know that that's not true. This is for all our paid members. This is in the Discord. There's a bunch of different things that you can be. Norway and the UK are a part of Europe, which is what I meant to say, which is not every country is in the EU. And that does have implications for the price of energy, the price of oil, the price of imports, that sort of thing. But most definitely Norway and the UK are not a part of the EU. And that kind of is part of the reason why I'm always showing this old stale map, but it's more or less still correct. You know, this is from 2016, but this hasn't changed tremendously. The only country in the EU that is oil producing, let me just double check that again too, because sometimes I get this confused, is this guy right here. Oh my gosh, I feel like I'm going to fail. Netherlands, there we go. I'm going to fail the geography quiz along with all the other Americans that are just notoriously bad at geography. But yeah, the Netherlands is the only country that is going to be oil producing adequate in 2016 to what it actually consumes. This has changed very, very little bit, but you still have no truly energy producing countries as relates to fossil fuels. And then I just want to remind you guys, here's where the nuclear reactors lay out. You do have France with the second most reactors, but it's really not enough because as you can see from this, they still consume a whole lot of fossil fuels. And that just is what it is. Now, I also wanted to do some follow-up as well on this. These are where the pipelines are. And I've talked about this before. Yes, it's wonderful. You could potentially bring it in from the Middle East and Africa, but how do you get it there is a not so insignificant point. And, you know, I'm not the know-all, end-all, be-all, but here is what the pipes are. I'm going to put this as well in our Discord. These are actually already in there, quite frankly, but you had really big pipes that came across this way, right? You know, this coloration and the wideness of the coloration gives you a sense for how big they are relative to the ones that come in from the Middle East. It's important to understand. And then also, these are the two Nord Stream pipelines that were coming in from Russia that kind of kicked everything off in January in the controversy, et cetera. So, and then Belarus as well. All of this, you can kind of see, just take a line straight down and realize that there's a problem. And you're going to have to bring a lot onshore to make it work, okay? Because here's the other ways you get it in route-wise. You get it in through here on Spain, Gibraltar. I think it runs through Gibraltar. And then down back here, you can get it in through Italy, right? And then there's a little bit you can get in over here from, I think it goes through Turkey. It's really hard to see on this map. I apologize. And then you got American bad geography going on as well. And that's what you end up with. But I believe it's through Turkey yeah. And then up north here, you can get it in from the sea this way, but you really did not, it's not just that you cut off oil, but you also cut off quite a bit of transportation route as well. So you kind of got to think about them both ways as well. And then all these terminals, from what I understand, Although, maybe there's others that do better channel checks than I do, it's fine. At the terminal, there's only so much they can hold. And, they're maxing that out best they can through the summer months, through kind of this shoulder period before we enter in to the main season in the summer. So it's not looking good. I also want to mention, this was in Consol Energy. You guys know that I've been more bullish on Consol in particular because they do focus on thermal coal. I think they might have a little bit of met coal, but it's really mostly thermal coal. And they underwent a project to just make the route and really improve what they're doing to try to get it from Pennsylvania over to the shipping ports on the East Coast. And it would make them, given where they sit, a little bit easier for them to get it over to Europe. And they had some interesting things to say on their call. This is what the IEA, I believe, is showing. Yeah, the Energy Information, EIA, sorry, I get that backwards for some reason. I got a little bit of dyslexia at times. The EIA is showing for short-term energy outlooks, and they're not yet really describing a world that needs a lot more coal. And Consol was saying, hey, here's the deal. We are definitely getting a lot of demand. If you have any coal that you can actually sell at spot, it's not going to last very long because people are definitely willing to pay spot on this coal. And then they talked a bit more and they said, look, I really think it's the case that a lot of these utility companies, because of the nature of what we've been doing as a nation for so long, they don't have heavy inventories. So this isn't about like, oh, we would love to burn coal because burning coal is fun and we like to destroy the earth. This is about, hey, I think it's smart to kind of just have some coal in inventory right now, because if I'm going to fight the rest of the globe for coal in the middle of summer, that's probably not smart, So that's what's happening right now in coal. Additionally, that also, one of the things that Consol has said over and over again, they're still an American-based company beholden to the way that we think about our energy supply here in the US. They said, look, we're going to supply to the United States first. We're going to make sure that we're sorted out here before we start sending overseas as far as that goes. Now, they said it a little different than that. So don't, if some of you guys just know better, let me know. That's fine. But it sounded like that's what they said. They've been saying for the last couple of quarters. So realize that. The third thing I really want to mention that they said that I think sometimes can't possibly be reiterated enough. And it's kind of the beauty, I think, right now that I'm enjoying listening to the management teams of heavy industries and metals and mining versus tech, is that these folks have people that have to get the stuff out of the ground. They're not going to do it in a way that's dangerous. I mean, people don't necessarily die programming Google's back office stuff. People could die if you don't take this out the correct way. Do you know what I'm saying? So it's not like they can ramp up capacity so fast and meet demand in this amazing way. No, somebody's got to go in there and mine it out, and it's got to be done in the proper way with really knowledgeable labor. So you can't be thinking about it like it's Amazon, and once you order it up, it just comes out in this beautiful natural way. That's just not how it works, either here in the United States or anywhere else around the globe. So they see multiple years of just a positive circumstance for the coal industry. Now they're really, I think, talking about both met and thermal coal at this point. We know that we're going to have to kind of see what happens on the industrial side of things to understand what's going on with metallurgical coal right this minute. Probably pronounced that wrong. I'll go ahead and admit that. But that's something that I just really want y'all to see. I remain very bullish on Consol Energy. This thing trades very wild right now. But when you look at the numbers, it is single digits. If you do it to earnings, cool. If you do it to EBITDA, which I prefer because there is a lot of CapEx going on in there. There is a lot of, sorry, not CapEx. There is a lot of stuff, let's say below the line, that you're going to have to understand is going to muddy it if you do a comparison to the previous year. So just note that that may be giving you a mixed number if you're a fundamental nerd. So I think EBITDA is going to be a better metric for you here. And that is still single digits in an environment that is going to be going like this on pricing. So realize that we're still very bullish on Consol Energy. Other stuff, yeah, I think that's the bulk of what I have for today. Let me go ahead and take some questions. I'll stop sharing. Hey guys. Are you guys on mute or am I on mute?
No, I don't really have any questions. That was really good. Thank you.
You're welcome.
Hey, Ming. Yeah, Dave.
Hey, Dave.
The way I'm looking, maybe, I mean, these companies, I mean, with unemployment is so low.
Yeah.
I guess there's a risk of labor inflation, but doesn't that help companies in general?
Inflation?
No. The full employment.
Okay, so that's the thing that's so fascinating is because when the markets kind of rallied yesterday, I was like, oh, good. People are going to take it in the way that I'm taking it a little bit, which is, wow, we got a great US economy here going on, right?
Right.
But unfortunately, I think once everybody had a chance to settle in and then Europe got to the markets early morning and was like, uh-oh, I know the US, because, and so I think that's where we get into this tug of war this summer, right? Because there's a way that the US does a 2008 and it's just, or sorry, does a 1998 and does just fine while the rest of the world is like bleeding through the nose. Do you know what I mean? And it's really a question mark on what we and how we are going to play it. Now, Chairman Powell has been very, very particular in what he says. His job is to keep pricing stable, and his job is to manage inflation for the United States, right? We watch overseas because we are intrigued and interested in its impact to the US economy, but our job is not to stabilize the economies of other countries in and of itself, except to the extent that it serves a potential risk for the United States. And he's got a really interesting needle that he's got to thread. Let me say it that way, so I don't mess up the saying altogether. Yeah.
Raising rates pushes the dollar up, right? Which ends up exporting inflation.
Yeah. So it could in some ways help. It could in other ways not help, right? Because it depends. If you're selling goods into us and the dollar's getting stronger, then it could help. Now, if that's not what's happening, and what you're actually doing is sucking in more of our inflation, that's not going to help. Unambiguously, I will always have some puts on Europe right this minute. I'm gonna have them farther back because for whatever reason, they're not admitting to how bad it is right now. And that is fair. You know what I'm saying? They do actually have the benefit of all those folks that came into their countries to lower the cost of labor, but it's whether or not that's going to be enough to offset the energy prices that are necessarily going to be up.
Right. Powell, I mean, he's been doing this a long time.
Yeah.
He does not seem hawkish, and he sees a lot more data than I do, so I don't know. He just saying, he could have said, yeah, we might raise it 0.75, but he's like, no, we're not going to do that. I mean, I think he's seeing some things that will bring in, maybe the supply chain will improve.
Yeah, I mean, that was something he talked about at the conference for sure. He's got to see, like, in fairness, he kind of has to see what happens with Asia. So he can't do anything about energy or with food. And in fairness, the companies are doing best they can, is really what it is, short of trying to do stupid stuff that will either get people killed or alternatively will result in capex that is just dumb. Both of them have, there's only so much that can be done from the Fed seat. What he can do is try to destroy enough demand to where you don't have this labor issue go crazy, because rising labor prices, it's like a fine dance. If it rises way high and then people just push through aggressively costs, then you end up with stagflation, and that's no good for anyone here or overseas. But yeah, he's got to watch it. I mean, I think your net beneficiary really is Latin America. I went through that yesterday a bit, but pretty much everybody in their Latin American business is doing great. And that's despite the fact that Latin America is not appreciating, enjoying, or otherwise liking the inflation that they are definitely importing in from us. But they're liking the fact that they can sell us stuff and we're willing to pay it.
Yeah, we help other countries. So, I mean, we're not sinister. Back to energy. Yeah. These oil stocks, are they still trading like oil is $65 a barrel?
I mean, plus or minus a little bit. EOG finally came out this morning and it was pretending like it wasn't going to rally, and then it rallied upwards. You know, that is a really, the thing that's going to be so interesting to watch. These guys are not going to do M&A to try to increase anything. They're going to try to increase production thoughtfully. EOG isn't even going to buy back stock. They're just going to keep the cash there, but they did issue another special dividend. So you've got to be careful if you're playing EOG on the option side, because they're basically saying, hey, we're going to give money back to shareholders. We're not going to care if the stock price goes up or down, because I'd rather just take it out of retained earnings and give it to you so I don't owe it to you later. Nor am I going to like reduce the share count and create this circumstance where y'all start playing with my stock in a crazy way. So EOG, I think because of the specific dynamic in the way in which the company is going to give money back to shareholders, I'll probably less preference that, because it'll be too hard to control from an options perspective, and prefer other names that are doing both buybacks and dividend givebacks. All of them, by the way, are paying back debt. So all of them will end up with a lower cost structure going forward.
Right. Yeah, they're very conservative by nature. No, oil companies,
Super conservative.
They always assume the worst.
Yeah, they do. They do. So even with the back part of the curve going up, you're seeing like very small increases relative to what, if we're legitimately going to be supplying for the rest of the world here for a little bit, but I don't think, I think that, so far, none of the energy companies, whenever asked questions about, what do you think about Russian oil, like being removed, et cetera, they're like, no, people buying it. Come on. Do you know what I'm saying? So that's an interesting thing. And then more than one has been like, look, people definitely buying the Russian oil. It's just there are countries that we're not necessarily angry with right this minute. So they're flying on the radar, like India, parts of Latin America, et cetera. So let's not pretend like that's not happening. They say it a little differently and probably more generously than I'm saying it. But then they talk about the fact that, that wasn't the problem to begin with. That was exacerbating the problem. Like that definitely exacerbates the problem like crazy. But the problem existed before we even had this conflict outbreak. So that's kind of thing.
Yeah. Your calls on energy were unbelievable.
Oh, thank you. I appreciate it.
Yeah. Like Devon, I think you were in it for 40 something, EOG 85 something. Devon's now 68 and
yeah.
EOG 130. But you saw that before it happened. That's what's really, really cool.
I appreciate it. I knew some people to look for and to listen to as far as that goes. And then they pointed me towards the right research, and that was helpful.
Yeah. And just for example, CNBC, one of the commentators recommended Devon today.
Oh my goodness.
Where were you like 6 months ago? Anyway.
Yeah.
Cool. That's
yeah.
awesome.
It's still going to be like, none of them are even like, all of them are pointing towards a multi-year situation. They're not pointing towards like, oh, this summer and then it'll be great afterwards. But I think it'll be very volatile. My issue is that with EOG is that it's not the easiest one to trade in the options market. But if you want to be long EOG, by the way, you're probably fine, because if they're just going to be giving back dividends, then you're going to be buying whatever dividend it is they're going to be given for the next 3 quarters, 4 quarters at a pretty decent rate. They had a $1 special dividend in the first quarter, and then they're issuing another $1 and something special dividend again. You know what I mean? And that's just a joke. That's a lot of cash given back to shareholders, and it's real money that you can then spend. The stock's only 120 something. You give them back like $1 and a quarter. That's like, and you still get an upside on the stock.
Oh, you're talking about dividends.
Yeah. Nice, calm dividends in a market that's a little crazy for the summer might not be a bad call. The other one that I think is, I hate it. I'm not thrilled to be recommending coal, but at the same time, you cannot deny what's going on in the coal industry right now. The fact that, really the thing I think that you said that really like stuck with me, because I literally just got off that call maybe an hour or so ago. I was listening to the replay. He was saying, I think utility companies failed to reserve enough coal going into the summer. He said it ever so slightly differently from that, but that's how I heard it. You know what I mean? You do not want to be buying natural gas if we have a big issue this summer on heat wave. That's his point.
Yeah, also, Biden is buying back oil to replace the reserves. So I don't know. But Devon yields 7.5%. Who would not want that?
Because they keep raising the dividend because they got so much cash. They're actually buying back now another $2 billion. So they'll buy back about something 3-5%. They'll buy back at this point. They can buy back they already approved to buy back like 3% of their total market cap. It's like $2 billion. And they're raising the dividend all along. They got a lot of cash. EOG honestly makes just as much cash, but they're just doing it through that special dividend, which none of us totally understand, or at least I don't totally understand. I know there's someone out there that does. So if they're watching this video and they want to tell me, put it in the comments. I'm down with that. I don't care.
Well, it's a one-time payment. It's what it is.
Yeah, I mean, I know they're trying to be conservative, but my God, if Devon can give back that much, EOG should be making it at an even lower cost basis. I'm not sure why they're doing it that way. Yeah. Yeah. It's crazy.
Thank you, May.
Yeah, definitely stick with your energy names at least through the summer. I mean, we got to see what's going on. And then on the fertilizer side as well, I'm still staying that's going to be volatile for sure, but there's nothing that's demonstrating that we're going to have anything but more fertilizer demand after this year. I mean, unless somebody's magically hiding a whole lot of grain somewhere. Do you know what I mean? I don't know how it's going to happen.
Putin, yeah.
Yeah, I don't know, but he's got people doing things other than farming right now. If you know what I mean?
Okay.
All right, guys. Have an awesome weekend. Bye.